Hello everyone, Mark here, and today we'll be talking about another NADEX strategy you can use for your day trading. Before we get into it, just quick disclaimer, this is not financial advice. I am not a financial advisor. I'm not telling you what to do with your money. Everything you learn here is educational purpose only, and yeah, use it as you will. Another disclaimer is on the video. You could see right here. Okay, now that you've read that, if you haven't read it, pause and read it, and now let's move on. So this strategy is going to be based on pound USD, also works on Euro USD. I wrote this little short ebook years ago, back in 2015, when I first found out about the strategy. I'm not going to go too much like reading everything. I'm not going to go too much into it. We'll just get straight to the point in this video. The first thing you're going to need is obviously pound USD charts on 15-minute time frame and MACD. Now, if you watch my previous videos, we are using the MACDs for the other strategy, okay? And so this has slightly different settings, so you might want to switch it if you want to use this. Now, you're only going to use this once a day. It's a trade setup that works once a day. Unless you're using it on Euro USD, then you have 2 trades a day. Okay, so you could pause the video and read through this. The settings are 12, 26, and 9. And you're using pound USD on the 15-minute time frame, okay? So the rules of this strategy are simple. During the hours of 1 p.m. Eastern Standard Time to 4 p.m. Eastern Standard Time, if you don't know what Eastern Standard Time is, basically New York time, the pound USD usually retraces from the morning trend. Now this is after London session has closed. So usually you'll see like a retracement from the morning trend that the London market set up. And so this is what you're looking to trade, the reversals. Okay, now the MACDs are gonna be helping you discover these reversals and get into the trade early. Okay, you're looking for a MACD to cross over, showing the trend reversal. It won't look perfect every day, guys. I will show you some examples after we read this, but as you practice, you'll understand how it works. Once you see the cross, you will enter a 7 p.m. expiry on pound USD on NADEX or Euro USD, depending on which pair you looked at, for the strike above for a sell or below for a buy, the candle where the cross occurred. Now, if this confuses you, again, I'm going to be showing you examples soon. And I just say here, I've noticed the pattern. The strategy repeats itself at least once or twice a week. So it's not something you're going to be taking every few minutes or something. It's just the crossover between 1 p.m. and 4 p.m. Eastern Standard Time every single day. Okay? So 1 trade every day. Unless you're trading Euro USD, then 2 trades. Now here's an example. Okay? So you can't really see this, but I will show you live charts. Here, this is an old example in 2015, so you probably won't be able to look at the chart here. But what I want you to pay attention to here is when the MACD crossed over, okay? It crossed down here. You see I drew a little line here. This is the candle it crossed over. So your entry would have been the first entry below, which I drew a white line. And as you can see at the 7 p.m. candle, the price was over it. This was a buy because it crossed for a buy. Okay? And then you won the trade. Okay? So let's review the rules. Here I just explained that we have the pound USD on 15-minute time frame. And we also have the MACD set correctly. At 3 p.m. Eastern Standard Time, we see a cross, which is this cross right here. And then you're looking to buy because this is a buy cross. If it was crossing from the top like this right here, we would have been looking to sell. However, so you buy the pound USD for a 7 p.m. expiry with the first strike below this candle where it crossed. Again, I'll show you an example. And then at 7 p.m., yeah, it ended in the money. Now, when not to trade this strategy. Do not trade this strategy if the MACD cross does not occur during 1 p.m. standard to 4 p.m. That means if it crosses at 4:15 p.m., you're not taking the trade. You're only looking for a cross between 1 p.m. and 4 p.m. Do not enter this strategy if there's USD news in the afternoon. So sometimes there is FOMC at 1 p.m., 2 p.m. Do not enter if there was news during that time. Okay, so just skip that day if there's news in the afternoon. And again, only enter on the first cross during 1 p.m. or 4 p.m. So sometimes it might cross twice, like a up cross then a down cross. You're taking the up cross, whichever one crossed first. Okay, if it crossed for a bullish trade, then you're gonna take the bullish trade. If it crossed for a bearish trade, then you're gonna take the bearish trade, whichever one crossed first. Here's another example. Again, we'll go into charts right after this. I just want to explain again. As you can see here, this candle here is what I'm showing you guys. The price crossed, as you could see down here. The MACD crossed right here, which was this candle. So you would have taken the trade at the first strike above the candle, which was the white line. I drew the white line there at that time. Now, this is years ago, but again, I'll show you soon. And as you can see, the trade ended in the money because 7 p.m. was, I don't know where 7 p.m. was, but I'm assuming it was this horizontal line right here. And it ended below. This was a sell and it ended below, so you were in the money. Okay, and that's pretty much it. Again, we go back to disclaimer. Just because it happens it's not always gonna happen, guys. So if it happens today, it doesn't mean it's gonna happen tomorrow. Past performance is not indicative of future results. Now let's get to the charts. Okay, so what we're looking for is the same rules. Okay, this time I'm gonna be talking to, if you forgot about the rules, just go ahead and review the video again. Let's start from Monday. We're only gonna do this week because I don't want to make this video too long. Okay, we'll start on Monday. Okay, so here we have Monday, and we're looking for a cross between 1 p.m., which is 13 o'clock, okay, and 16. So as you can see here, we actually did have a cross right here. So let me look at the chart here. We had a cross right here. Okay, so the first strike above here, it says the highest was 1.30059. okay, so I'm gonna assume the first strike above was probably like 1.3008 or even 7. So I'm gonna draw a line just to show you guys an example at, where is it? We're looking at 8. So we're gonna draw a line. We'll draw the line right here. Did we draw it correctly? No, that's too far. Okay, we'll draw it like right here. Okay, now this is where it crossed. Okay, so we're looking at the first strike, and then we're gonna see at 7 p.m. where it ended. As you can see right here, guys, right here, this was the last candle because the next candle started at 7 p.m. So this candle here, if we look at when this candle ended, let's take a look at when this candle ended. This candle closed at 1.30059. So even if you took this trade at the money, well, not at the money, but you know, even a strike within this candle right here, you would have been in the money. Okay, so anyway, this was Monday. Let's go on Tuesday. Let's see what happened Tuesday. Tuesday here we have 1 p.m. candle. Let me actually, can I delete this now? Okay. So now we have Tuesday. The cross happens at around 4 p.m. This 4 p.m. candle is what crosses right here. However, we're not looking to take this trade. If it crossed after the 4 p.m. candle started, we won't take the trade. So this candle here, invalid. So the Tuesday, last Tuesday, was invalid. You didn't take the trade on pound USD. Now, if pound USD doesn't have a cross, you could look at Euro USD. Now let's look at Wednesday. Wednesday we have a cross at, let's take a look here. We had a buy cross right here at 2:30, okay? 2:30 right here. If you took the first candle, okay? I mean the first strike below. Let's see, when was this? The lowest was 141. So let's assume the lowest is 1.2. Where's 1.2? Right here. So I'm gonna draw another line, and we're gonna take a look at the lowest, which is, we'll assume it was 1.2. So like right where I drew that, I think. No, not right there. Yeah, like here. Okay, we'll leave it there. So 7 p.m. Okay, 7 p.m. is right here. As you can see, the strike at this last candle would have been the last candle. It ended way above the line, which means Wednesday was also in the money. Let's go to Thursday. We're looking for the cross after 1 p.m. Okay, guys, 1 p.m. So the cross after 1 p.m. was this right here. As you can see, this was really weird. Like I said in the strategy book, it's not always going to be perfect, but you're gonna have to make it work. So right here it crossed, and what is the, let's see this candle, the highest was 7.9. So let's assume the next strike is probably at 8.4. Okay, so we're gonna draw a line at 8.4. At 8.4, give me 1 second. Let me go ahead and draw a line at 8.4. Where is it? We'll draw at 8.5. Okay. I don't know why it does that. We're looking at 8.4. Okay. Now let's see at 7 p.m. where it ended. Okay. The last candle. As you can see, this was the last candle right here. Let's take a look at where it closed. This closed at 8.2. So if this first strike was 8.4 or even 8.3, you still ended in the money. The last candles closed at 8.2. So this was in the money as well. So Thursday. So that's Monday, Wednesday, and Thursday in the money. Tuesday was a no trade date. So I mean, I could go back for hours, guys. I mean, you could try this out yourself. Go back and check the charts and everything and see what you find out. This strategy has been around for years. I did not create the strategy. I just want to emphasize that. I did not create it. The first time I read about it was from a trader named Cam White. And I think he got it from another trader called Crystal. She might have been the one who created it. As far as I'm aware, that's where I stopped researching about who else she heard it from, but I think she was the creator of this strategy. I am not taking any credit for this. I'm just showing you guys another strategy you could use to make money, especially if you're not a permanent, like you're not able to like sit at your chair and look at charts and you just want to trade from your mobile. This is pretty simple. You could set up MACD and Heikin-Ashi on your cell phone, and then you trade it based on what I just told you guys. 1 p.m. you wait for a cross between 1 p.m. Eastern Standard and 4 p.m. Eastern Standard, and you take the trade in the reversal. You know, so if the MACD is bullish and then it crosses bearish like right here, you take the trade on the first strike price above the candle where it crossed. Okay, and then as you can see, it will end in the money. Sometimes you will lose it, but it's fine. It's not 100% proven strategy, guys, but I hope you guys found this useful, and good luck. Thanks for watching.